terms of getting onto the property ladder, I was thinking, or someone asked me to ask how, because not a lot of women are thought about when it's in terms of being on a property ladder and being landlord and so on. So how would you, what advice would you give to younger women who want to get into the property ladder? How would they, like, what steps could they take?
I guess this is advice for anyone really, is figuring out, first of all, getting yourself credible and mortgageable are the two main factors. So when I say credible, I mean like in terms of your credit. Do you have good credit? Because when you're borrowing money for a mortgage, they're going to be looking at, okay, have you had debt before, and how were you in paying off that debt? So things like credit cards, when used responsibly, so if you get yourself a credit card and you buy something using your credit card, make sure you pay it off in full every month. That over a period of time will show a lender, they'll look at you and be like, oh, okay, she's had credit before and she's paid it off on time. You know, we trust her, she's credible. The next bit is mortgageability. There's a lot of different factors that play into play into you getting a mortgage. So there's things like, so when a lender's looking at you, all they care about is, what is the risk I'm taking? If I lend this person this bucket load of cash, what risk am I taking? And what they'll look at, so they have their metrics, but they'll look at things like, okay, how old are you? If you're very young, they could think, oh, well, how are they going to be able to pay off the mortgage? Have they got a job? How stable is their job? What's their salary income? Often there's like a magic number. So if you take your if you take your annual salary and you multiply it by 4.5, that is usually the amount that you can borrow from a bank in terms of a mortgage. So that's what they'll be looking at. They're looking at what you're earning on a salary, and whether that's enough to pay off your mortgage and still leave you enough money to live and have expenses. So they'll look at your age. If you're too old, if they consider you to be too old, so let's say you're pushing 65, 70, pushing 60, they're going to be like, well, we're not going to lend to this person because they're going to retire in 5 years or whatever, and they won't be able to pay us our mortgage back. So they'll look at your age, what salary you're earning. So if you can get yourself a decent enough job, do it. If you're self-employed, they're going to be wanting to see your self-assessment, your accounts. So they want to know, as a self-employed person, how much are you earning, and will you be able to pay off the mortgage each month? I always advise people to, as soon as you begin thinking about it, speak to a broker, to a mortgage broker, because there's a lot of brokers out there that will give you kind of a free consultation call, and you can just explain to them your situation, the kind of properties that you're looking at, and they will easily be able to tell you quite quickly, okay, based on your circumstances, these are the kind of lenders who would lend to you. So when I was looking, I was 23 at the time, sat down with a broker, and they were like, you've got quite a lot of things against you. You're under 20, he's like, you're under 25, so you're already considered quite risky. And you don't already own a property. So it's going to be, so I think at the time, the only lender that would lend to me on a buy-to-let basis on my specific circumstances was NatWest. Wow. But now, if I go out to buy another property, there's a number of lenders that will now lend to me because I'm considered less risky. I already own a property. I've been paying the mortgage off on a monthly basis. People are going to be throwing money at me. So it is very much about kind of answering those questions. Can you get a mortgage based on your circumstances? Things that would affect your mortgageability that you don't often think about is something like car finance. A lot of these young kids, like once they get their first job, they're like, oh yeah, let me go get this nice car. I'll just get it on finance. But that is considered a liability. So when a lender is looking at you and you've got this huge car loan that you're paying off, they're going to be like, okay, you're not going to be able to afford this mortgage because you've got this loan to pay off as well. So just be careful with the lifestyle that you're leading. If your goal is home ownership.
I feel like a lot of people my age need to hear that, because that's literally the first thing like a lot of us do as soon as we leave uni. Even before uni, just get the nicest 18 plate car on finance, and then so yeah, that's to everyone who's financing cars. Basically, that one's for you, isn't it?
Yeah. When you get older and when you're in a position where you can, you know, your business, you've got a, you know, a thriving business or a thriving property business, you can get that car on finance and pay it off. But when you're starting out and you're young, yeah, a lender's going to be like, ooh, that's very risky.
A lot of us want the instant gratification. That's why no one wants to delay their gratification. So
exactly.